Hi, everyone, and welcome to today's webinar, Personal Lending 101, a newcomer's guide to borrowing and building credit in Canada. My name is Riley Cohen. I'm the CEO of CanadaVisa, and I'm very excited to welcome you all here today. We're going to start this webinar with a presentation by our guest from TD Bank. After the presentation, we'll have a question and answer period, giving you the opportunity to interact with our guests. Thank you all for submitting your questions prior to the start of this webinar. We've already planned to answer many of them, but of course we encourage you throughout the webinar to continue to ask questions in the chat below, and our team of moderators will add them to our question queue. We're lucky to have two guest speakers with us today, Amelia Kwok and Guy Gaspari. Amelia Kwok is a senior manager in the personal lending team at TD Bank. She leads and executes on business strategies that drive more loans and lines of credit sales. In the last year, she's worked closely in developing a strategy for newcomers that is focused on educating and bringing awareness of borrowing products to customers early in their financial journey to Canada. She moved to Toronto from Hong Kong when she was 4 years old and witnessed firsthand her parents' journey in reestablishing themselves in a new country. She has over 20 years of experience at TD, holding various roles supporting credit products. Thanks for joining, Amelia. We appreciate your time. Guy Gaspari is a product owner in the personal lending team at TD. He leads the strategy and execution of initiatives delivered in partnership with TD Wealth and Commercial Banking. Guy is a newcomer to Canada himself, having moved from Sao Paulo, Brazil in 2022, and now lives in Oshawa, Ontario. He joined TD shortly after arriving, having more than 17 years of experience working in the financial industry. Thank you, Guy, so much for joining. Again, we're going to have ample time at the end of the webinar for a question and answer period. So we encourage you throughout the presentation to ask questions in the chat below. Please, everyone, remember that the chat is public, so do not share any personal information, such as your phone number or email. These messages will be removed from chat. One last note is remember that the presentation slides and a recording of this webinar will be shared with you in an email afterwards. So if there's any portions of the webinar you want to rewatch or go over in more detail, please look out for that email. And without further ado, I'm going to hand it off to Amelia from TD to start this presentation.
Thanks, Riley, for the great introduction. Thank you, everyone, for joining today's webinar. We are very excited for the opportunity to speak on the basics you need to know about borrowing and building credit in Canada. So our presentation is going to be divided into two parts. I'll be speaking first, which gives you the facts you need to know on today's topic. After, I'll pass it over to Guy, and he's going to speak more about his own experiences with borrowing and building credit as a newcomer. So to start, quickly walking let me just get to the right side. So to start, I think we're going to start and look at what is borrowing. So at TD, any personal lending solutions outside of a credit card sits under the borrowing umbrella. So personal lending refers to money that you borrow under your personal name and personal finances. Usually it's unsecured borrowing options, which means you borrow money without the need to provide any collateral or security for it. A mortgage, for example, is a secured lending product because you use your property as collateral for the bank to lend you the money. Now, outside of credit cards, we see borrowing products be less of a transactional product that's used in daily life. So commonly, they are used to meet a very specific borrowing need. This could be buying a car, doing some renovations, or even to pay for education. I'll go through a little bit more in details of the various needs later in today, because it'll vary depending on your life stage, your time in Canada, as well as your own financial goals. So loans and lines of credit are the common borrowing solutions, and both products can be considered when you look into what is a better option for you. And this all depends on your specific financial need, as well as the situation that you want to resolve. So at TD, we have a variety of different loans and lines of credit, each to meet a specific borrowing need. So in the next section, I'll speak more to this and I'll explain what the difference between the two products are as well. Now let's move on and discuss how these products help you build your credit. So first off, I think credit history is extremely important in Canada because it's a record of how well you manage your money. When you think about credit history, it's required when you need to borrow money. It's asked when you rent a place to live, or it basically can come up anytime anyone needs a record of how you're using money and how financially responsible you are. So if you think about it that way, it's really important to pay off your bills on time. And so bills can include not just those credit card bills, it's also included your phone bills, your utility bills. It's important to repay any money you borrow responsibly, and as well as keeping up with the original repayment schedule you originally agreed to. Usually when you first arrive in Canada, I think the first credit product you start off with would be a credit card, which is a great start in building your credit history. Now, as you get more established, having your loans and lines of credit in the mix adds more depth into the credit history because the nature of the product's purpose and the repayment structure are different from a credit card. Responsible use of loans and lines of credit may yield a much better credit history than no history at all. So think of it as leveling up, which will be helpful when you're being considered for larger borrowings in the future. This could be larger money when you're thinking about buying your first home or even like starting your own business. So by now you're probably thinking what exactly is the difference between loans and lines of credit. So I'll start with a loan. So which is a specific amount of money in one lump sum. It's ideal for major purchases such as a car or furniture, home renovations, or even to manage your debt. Since the money is provided to you at once, you know exactly the amount that you're borrowing upfront, the payments and the interest gets repaid upon agreed upon length of time. So at TD, there's a choice between 1 to 7 years, which is referred to as the amortization period. So this is the time you would need to pay off the loan completely based on the payment frequency you choose. It's also used to calculate payments. So in addition, you can choose between a fixed or variable interest rate, as well as various payment frequencies, which is how often you want to pay back your loan. So fixed rates are exactly what it sounds. You know exactly what the rate is. And then the variable rate is tied with prime rate plus a variance. Usually taking a longer amortization can make your payment amount smaller, while a more frequent payment schedule, for example, if you pay weekly as opposed to paying monthly, you'll save on overall interest. So regardless of whatever choice you make, it's important to make sure you pick something that works for you and with your budget. As previously mentioned, there are different types of loans offered at TD. So we have our personal loans, which is a great for specific larger purchases. We have car loans, and we offer it both for private sales. So that was just a sale between without going through any sort of a dealer. And then we have sales made through dealerships. We also have RSP loans, which is used to purchase investments that can go into your retirement savings plan. So moving on, I think next is the line of credit. And what that is. So a line of credit is an ongoing access to funds that can be used and reused. It gives a lot of flexibility to borrow from a variety of needs when you need it, and you don't have to reapply for it every time. Now, for that reason, it's a product that's harder to get approved for newcomers as it requires a bit more credit history on file to be considered. So as a new Canadian, you usually start with a credit card or a loan in the first 6 months and have lines of credit in mind once you've established a bit of credit history and have a more stable repayment ability. Interest on a line of credit is only charged on the borrowed amount, and there's a flexibility to pay as little as the minimum amount set up in your agreement, and this will depend on what type of line of credit you have. Given the flexibility, it's also important to be careful not to accumulate like too much debt, but just paying that product minimum. So to really showcase responsible use of a line of credit, it's best to keep on a repayment schedule that aims to eventually pay off the outstanding balance completely. So when we think about it, it should be not just the interest portion, but always take into account a bit of the principal. So again, at TD, we offer several types of lines of credit. the personal unsecured line of credit, the student line of credit, specific for ongoing education cost, as well as the investment line of credit, which allows you to use some of your own assets as a collateral to borrow money off of it. More details around our loans and lines of credit can be found on our website under the products dropdown in the borrowing section as well. So next, we'll talk a little bit around the borrowing needs and how loans and lines of credit may be a powerful tool for addressing your financial needs and challenges. I think generally speaking, these next borrowing needs come after you have started your life in Canada. We categorize them into 4 groups. We have unexpected expenses, large purchases, managing debt, and investing in future. So unexpected expenses and large purchases may go hand in hand because in both cases, you want to have funds you need in an emergency or to accomplish something that is more of a short-term plan. So examples of an unexpected expense include a sudden need to fix something, whether it's like your home or even like your car. Large purchases that are more planned are commonly used when you think about all of a sudden you want to do that. Some scenarios are buying a car, would be buying some furniture, large electronics, or even security systems, just to name a few. So usually borrowing for those needs will allow you to handle those expenses outside of your regular budget. And then when we comes to the next one, I think is managing debt. Both a loan or a line of credit can be used. We can think of it as using, usually it's when the interest rates of these products are lower than that of a credit card. So if you've racked up a lot of like credit card debt or higher interest rate debt, it may make sense to consolidate your debt with a lower interest rate product and start making only like one payment, and then with a goal to eventually pay everything off. So finally, investing in the future may be another reason to borrow money. We can think of this as using the money to kind of further our future. Some reasons to borrow may be for education or even to fund your investments. These are probably the best ways or best times to borrow money, as the money you borrow may help you become more rich, and whether it's growing your assets or to expand your knowledge. So now that we've gone through the borrowing needs, it's important to note that this may change as you enter the various stages in your financial journey. We've broken out this journey into like 4 parts. There is pre-arrival, which is a suggested timeline to be months to years before someone arrives in Canada. It's really the learning and research stage. The next 3 stages have a suggested timeline to be the first 5 years in Canada. So arrival's suggested timeline is the first year you're in Canada. I think the need to borrow money and like use loans and lines of credit may be a little bit lower, as the focus right now is to establish yourself and build your credit history. The products, you may start from a banking perspective. You're probably looking at like a checking account, a savings account, and your credit cards that takes care of your day-to-day kind of banking needs. Once you start building your credit history and you enter more the getting established stage with suggested timeline of 1 to 3 years, this is probably a great time for you to start thinking about loans and lines of credit and how they may help you sort through all the different challenges that may come up, whether they're immediate or they're planned. And then finally, the last stage is growth with a suggested timeline of 3 to 5 years in Canada. So at this point, your daily routines is like established, your work is stable, and there's really capacity for you to start thinking about that next step. So borrowing needs at this point may be more about building a stronger and better future. Regardless of where you are in your financial journey, I think knowing your options and seeking advice from financial specialists is going to help you make more informed borrowing decisions. TD has a lot of ways for us to support you and get connected. So feel free to contact us, whether through one of our branches, calling our phone channel, or even through our website. So please don't hesitate and get in touch. So now we've talked a lot about borrowing and the product options you have if borrowing needs come up. So in order to have credit work in your favor, I think some of the things you need to consider especially when you're borrowing money, is one, you need to review your budget. Consider your financial situation and make sure whatever choice you make, you are able to manage those repayments. Consider the income that you're making, the expenses you have, any existing debt to help you decide if you can take on more. I think borrowing within your ability will make borrowing money less scary and helps you develop good debt behavior, which overall will improve your credit rating. Now, remember, there is good debt and bad debt. I think good debt generally allows you to help build credit history and invest in your future, while bad debt is when you borrow and you're unable to make that repayment. So after talking a lot about borrowing and building credit and all the different products that we have, I'm going to turn it over now to Guy, who's going to share more about his experience in Canada with credit and how he learned about personal lending products.
That's awesome. Thank you, Amelia. Thanks for sharing a bit of your knowledge with everyone today, and thanks CanadaVisa, Riley, for giving folks the opportunity to know more about the importance of credit in Canada and what solutions are there to support them on their personal journey. So it's kind of funny, like looking back now after a couple of years, and it will be challenging to share my experience in 10 minutes or less, but I'll do my best. So the first time I realized the importance of having a good credit score in Canada was even before I had a credit need. It was actually when I was trying to rent a place for the first time here. I was shocked in a way, I'm not asking a bank any money. I have a full-time job. I have my pay stubs. I have my tax fillings translated, a positive net worth. So why is this person asking me for my credit score and my credit history? So why does that matter, right? I got a place eventually, and I needed to buy some furniture. Then I saw this amazing no interest for 2 years offer that everyone's get approved, which I obviously got declined. And of course, there is also me thinking I would easily get approved for a premium credit card just because I could afford it, right? And the list could have gone on and on if I didn't realize that the credit bureau checks would eventually impact my credit score. So learning how to play the credit history game is something that you will need to do in Canada, whether you like it or not. And like any other game, you should start by knowing the basic rules to succeed in it. I would definitely recommend you get information from a trust source. All major Canadian banks have pages dedicated to newcomers to Canada with content related to credit score and many more. There's a bunch of information available on Equifax and TransUnion websites as well. Those are the credit bureaus. Look for Learn tabs. It's a good place to kick off the right way. But as important as knowing what a credit score is, what information is available on a credit report, you should also understand how all of this information is used and by whom. So Amelia already told us the importance of credit history in Canada and how it's used as a track record on how well you manage your money. It may seem unfair at first if you have like a very good track record in your home country to start from scratch when you land in Canada. But let's put that into perspective. How someone who's not as specialized can make a fair and biased assessment on affordability, financial situation, avoiding fraudulent documents on an individual level. So even saying that is complex enough, right? Reports like the credits report, they're made available by credible companies with access to information can help everyone with that. And that's not exclusive to credit or personal finances. Like the credit report is good. It's a good guess on what you can expect from a person when it comes to finance. We have Carfax reports that would give you a very good idea on what you're getting from a car. And newcomers are used to that more than we notice sometimes. Think about language assessment reports, ECA reports, all of that. So it's likely that anytime you need to make recurrent payments to anyone, a credit check will happen. This can be positive though. It can help you by putting your rental proposal on top of others so that you could get a place to live. But it can even lower the amount you have to pay for a loan, for financing, or for a leasing. And eventually, you need at least one of them. So once you understand the rules and how this will impact your life, you need a plan. In my case, I did some research and I thought I had it all. So I found the best newcomer banking offer, got a credit card, started spending between 30 and 50% of my credit limit every month, and had access to my credit report a few weeks after getting approved. Everything was going fine, but I got stuck at some point. So I used a credit score simulator and noticed that applying for another credit card will help me to increase my score. I found a very good offer on a premium credit card and boom, got declined. So luckily for me, it wasn't a hard check, but from that moment, I've lost all the confidence I had. So how could this happen? I mean, I've been doing this for 5 months. I've been paying my credit card total, never delaying a payment, and this is what I got. And then month later, I received an offer to increase the credit limit of my old credit card. And how could this make any sense, right? But we can take a few lessons from it. So first, go for the new to Canada offers. So these offers are tailored in a way so that borrowers are not taking more risk than necessary and you are not applying for something that wasn't designed for you. Two, be patient. Unfortunately, you won't build your credit history and get from 0 to 800 in 6 months. It takes some time. So is there anything I would change in my plan? For sure. So I would rely more on what my bank has to offer, especially having more and earlier conversations about how I could improve my financial planning. For a while, I had the impression that my newcomer status was a burden. I wish I had a line of credit when I had to spend $4,000 upfront to repay my to repair my car a few days after I bought it. But when that happened, I didn't even know if I was going to be in Canada in the next year. So would you lend money to someone that you wouldn't know for sure is going to be around for next year? Perhaps you would. It's a good friend, family, I don't know, but not everyone is okay on taking that risk. And this is definitely not how the credit business works. So I really hope that doesn't happen again. But next time it happens, I will be in a completely different scenario 2 years after having moving here, right? I might prefer keeping my money invested in registered accounts and use a line of credit limit to pay for the repairs. Or I might want to change my car before that and get an auto financing or leasing and get rid of the mechanic issues for good. The difference now is that I'm much more confident to chat about my future and understand. And I understand now that credit is not a sign that I'm in a bad financial situation. Instead, it is a tool that is there to be used to help me to achieve my goals. So don't feel ashamed to make a visit to your branch every now and then. Book an appointment, talk about where you are in your journey, your current needs, your next steps, and ask how they can support you with that plan. So, okay, now you know what credit score is all about. You have your plan. You know who's helping you. Have started building your credit history. Then what's next? So try to make it a positive cycle. Don't make it a gold rush. Start small. Be patient. So the more you show lenders you make good use of the credit you have access to, the more access to credit you have. The better your credit score will be, the less expensive the credit you use would be. Take a step at a time. It's okay to envision larger investments, such as buying a house or supporting a relative's educational costs, and understand what's the right credit products are for those purposes. And remember, it's not about demonstrating that you can afford it today. It's about demonstrating that based in your past, you can do it in the future as well. Well, I think that's all for me, and I hope my experience has helped you somehow. Thank you so much for bearing with me, and wish you all the best in your journey in Canada. So passing it back to Riley now for the next segment of the webinar.
Awesome. Amelia, Guy, thank you so much for your time and presentation here. Everyone in chat, thanks for sticking around for the question and answer period. We're going to go through some of the questions that you've posed in chat, and also some of the questions that we've received prior to this webinar. Please, if you have follow-up questions, don't be afraid to ask them, or if you have new questions that pop into your head, don't be afraid to ask them. We'll try to get to as many as possible in the 30 minutes that we have left. Great. So a lot of questions here, Amelia, around building credits. Uchenna asks, how do I build my credits? Cassandra asked, how does using your credit card build your credit? So I guess the question here is, what's the best way a newcomer to Canada can build their credit history?
So I'll try to answer that. I mean, there's no run straight answer. I'll give some ideas. I think based on what I said, there's several ways that you can build credit history. I think one way to build credit history is actually to borrow money, right? So we talked a little bit about I think having a credit card as a newcomer is a way. I know TD offers like the New to Canada package, which has includes like the checking account, the savings account, as well as the credit card. So that's kind of like your starter product. In terms of how to use a credit card to build it, what we're looking for is people that are responsible with the use of a credit card. So I think, yes, credit cards makes our life easy. It helps us with our day-to-day purchases. What's important is to make the payments. So when you get your credit card statement, make sure you at a minimum pay the minimum payment that they require. But it's also more important, if you want to have a stronger credit history, to really pay off that balance, or do the best you can, and not keep falling more and more into that credit card debt. Another way that also people, sometimes don't realize part of their credit history, your bills are also very important. So when I say bills, I think I mentioned it briefly. There's like your phone bill, your utilities bill, and those I would say like are your starter products. And then when you go into like your loans and lines of credit, again, we're leveling up. We're looking for, types of products, more sophisticated. The more different products you have, variety, it just helps you build kind of that. It gives people more information, and then it helps you give a little bit more depth in that credit history as well too.
Awesome. And on this topic, Dele just asked a question about what is credit utilization ratio for a credit card, and when is it calculated? Is it calculated at the end of the month or throughout the month? I know, yeah.
Yeah, I mean, this question's like, I'm gonna try to understand it just kind of based on, I think you're asking about, like, are we asking about how the payments are calculated and so forth? I mean, again.
Yeah. So I was going to say, I think Guy mentioned this during his presentation, the 30% credit utilization rates.
Mm-hmm.
So the question was specifically about how that's calculated.
Yeah,
Guy,
so
do you know the
that
answer to that?
is so that is the percentage of your outstanding balance over your total credit limit rate. So for example, if you have $1,000 credit limit, it's recommended that you only have $300 in outstanding balance. So ultimately, this is what is going to be used to calculate this utilization rate.
Awesome. Great. Thanks. Great. Miss G asked, how does credit history from the country she's currently in factor into her Canadian credit history? I guess this will be for Amelia.
Yeah, so unfortunately, we we don't look into that when looking at credit applications. We're looking at that Canadian credit history. I think in kind of his story, maybe you can add a little bit, kind of like what happened for yourself, because coming from your originating country.
Yeah, that's exactly it, Amelia. So I felt like I was starting all over again, like if I was born yesterday. So yeah, the financial history, so our credit history that we have from our home country is not brought here to Canada, right? So unfortunately, this is something that happens, but in a way it makes sense, right? So you were living in a very different situation. So like I was living in a very different situation. So I was there, I was established for a long time. So I have had all my products back in my home country. So that is my credit history from pretty much another life, right? I'm starting over here. So it's a new life. So it makes sense that, you're not kind of importing your credit history back to Canada. So yeah, that's my experience with it.
Great. Thanks, Guy. And Another question for you, Guy, from Angela. Angela asked the following. I would like to rent a unit or a home, my family, but the owner asked me for my financial records in Canada. What can I do? What kind of records can I provide?
Yeah, so I had that same challenge, right? And especially if you were in the same position I was when I received that kind of ask, you won't have a credit history, right? So at that point in time, it were like my first days in Canada, so I didn't even have like a credit card. So how could I have like a credit history, right? So yeah, so this situation might happen, right? So if we think under a landlord perspective, how could they kind of differentiate between 30, 40 applications? And I was here in the peak of the rental market, right? So it was very, very hard. Everyone was trying to get a place to rent, right? So using that report, it's kind of a way to have support on making decisions, right? So this is something that is commonly used here in Canada, and it kind of makes sense when you're living under that environment that someone would ask that. And I've kind of mentioned, right? So it's not only for rental. So every time you need to make recurrent payments, someone will check your credit score, your credit history. That happens when I moved to Bell, right? So they wanted to see if I could afford paying for my internet and my phone. So it will happen, right? So when it comes to rental, for example, and this was my experience, I had to negotiate with the landlord, right? So I couldn't offer a credit history from Canada, but I could offer different documentations, right? So I could share my pay stubs. I could share, like I said, my tax fillings from my home country. So I could provide documentation, and it was translated, of course. So it was true in a way that I could afford the monthly payments, but that is pretty much more a one-to-one negotiation, right? So it's not uncommon for you to get to a situation where your landlord accept different documents than the credit history, but it's a one-to-one negotiation. So if you like a place, make a proposal. When it comes to documentation, you have to negotiate.
Awesome. Thanks, Guy. Amelia, Lilia asked about how, I guess, your current pay affects the kinds of credit products and limits you're eligible for. Can you maybe talk a bit about that?
Yeah, that's a very good question. So I think income is part of your credit application. So I think we should, like, when looking at this in a broader sense, when at the bank, when we assess to see if how much money we can lend to you, and that goes across all of our credit products, we look at like your income, your existing debt, as well as your credit history to determine kind of that amount. So I guess it's hard to say. It depends on the income, depends what you're asking for as well. So that's kind of where we want to make sure you can repay. But again, having stable income helps, especially because it shows, repayment ability, right? That is also something that we look for.
Right, great. And a follow-up to that, Biomba asked, does your savings balance help with this too?
Yeah, no, that's an excellent question as well. So again, we also take into account your assets as well as your liabilities. So, when you're saving, so, because savings also shows that, you have, have the desire to save and the ability to save. So that also gets into account of the within the credit application.
Awesome. Question for me, I think Rudolph said, I joined late. Is there going to be a recording that will be shared with you? And just a reminder, yes, this webinar will be recorded and shared with you tomorrow by email. So look out for recording so you can go over the portions of the webinar you missed. Guy, there was a few questions here about from students. One came from Jasper, which Jasper asked, how can I get a loan to go to university, and do those kinds of loans exist in Canada?
Yeah, so in our Canadian market here, we're more used to student line of credit as the way to finance education. it has a good explanation for that, right? So I think outside of Canada, we look more on, I need some money to pay for my tuition, right? Whereas in Canada, I think the beauty of our product is that we are not only looking for tuition. Of course, tuition, it's a large portion of your monthly expenses, and perhaps you have to pay up front for this semester. But we are also looking to finance the living expenses that a student may have, right? So I'm not aware of loan offers for students, but I am aware of the student line of credit offers that you may find in any Canadian banks.
Awesome. And can international students can borrow money? This
Yeah,
question
I
came
think
from
for
Nicola.
yeah, I think for international students, so I don't know all the possibilities that there are out there. I think I might know the most important and mainly for the larger banks, which I think are the most accredited places for you to get some financing rates. So the problem with the international students is that you have a visa that has an expiry date, right? So imagine someone getting your application and say, hey, this is Guy. Guy's a student. He's going to be in Canada for 2 years, and he's asking for, I do know that tuition for international students are very expensive. So he's asking for $20,000, right? So loans usually are products that have a longer amortization term because that's how you repay them, right? So 20, $40,000 over the course of 5, 7 years, it's something that perhaps would be under your budget, right? But how can you repay that much amount of money in 2 years? So what this is basically the reason why it's so hard to get an offer for international students in Canada. You don't know, so maybe that person can come to Canada, stay for 2 years, go back to their home country, still keep repaying the loan. They can stay in Canada, they can get a job, and so it's very, very hard because we have a very small set of information to make a decision, right? All we have is that visa with that expiry date. And unfortunately, I think the time length is not that long.
Right. Thanks, Guy. Amelia, Silver asked at the beginning of the presentation in chats, is there a difference between how a credit card or credit line of credit affects your credit score?
Yes, there is, because they're two different, as mentioned in what I said earlier, if the presentation, the products in nature are different. So how they build and contribute to your credit history is ultimately different. Credit cards, again, it's more of a day-to-day, usually in your daily life, within 30 days. Line of credit is usually larger sums of money, and that's why the revolving credit portion is kind of a little bit harder for newcomers to go by, but we're just looking for a little bit more meatier credit history to do that. But I think, again, for your credit, it just shows more discipline on how well you use your credit. So they do act as different purposes within your credit history.
Great, thanks. And then a follow-up again on credit scores. This question came from Sakti and asked about fluctuating credit scores month to month. Will a fluctuating credit score have an impact when I apply for a new loan?
So yeah, so in general, your credit score doesn't really fluctuate as much as you think it does. It doesn't, because we're looking for, usually there's ranges that, determines, maybe the pricing of the product, whether you get approved or not. However, it's a fairly large range. So your credit really doesn't fluctuate unless, you've been paying your debt and all of a sudden specific situation has happened and you've paid like nothing for a long time, then I think that would cause a dramatic impact. But overall, it's pretty steady in terms of range wise.
Great. And then a few questions here about buying a car or buying a house. What kinds of credit scores, I guess, should people be aiming for to buy a car or house? Or if that's a difficult question to answer because it's very dependent, how should newcomers approach building a credit score to eventually buy a house in Canada?
So again, I think the credit score is only a component of the credit application that we look at, specifically for cars or like buying a home. They're generally, again, we're talking about larger sums of money, right? So we assess, your financial situation, your assets, your income. Credit history is part of it. I don't think there's a definite score or not, but we're just looking to that tells us how well you've used your credit in the past. So, a positive use of credit in the past, you're paying your bills, you're paying things on time, you're responsible with your money. I think that, is a more solid credit application than somebody who has, always been kind of a little bit less responsible with their credit products in general.
Great. And Divya asks, are there loans available for people at pre-arrival that aren't in Canada yet but have a visa issued already?
Okay. So similar to kind of the international students situation, so we don't lend to non-permanent residents in Canada. So when I say that specifically, we're talking about our personal lending products. So for loans and lines of credit, generally we are only lending right now to people who have that permanent residency. So for people that are more temporary, so if you're on a work permit, you're international students, usually don't qualify for these products. We have other options for you. And again, once you're in that realm of like applying for that permanent residency, that's when you should come, and that's why we encourage you to come and talk to our specialists. Like that's when they can understand your story and help you get to where you want to go.
Great, thanks. Guy, you touched a bit on this, and Demita just asked in chats, if I have a credit line of $1,000, what percentage should I maintain that will be considered good? I guess it means of credit utilization. And then a follow-up to that, somebody just asked, does paying my credit card off quickly, or does the speed at which I pay my credit card off affect my credit score?
So that can actually be a tactic, right? So it really doesn't matter how much you use, but actually the amount you have, the outstanding balance you have by the time when someone checked that, right? So it is a tactic that you can use to, instead of having like waiting to pay for the bill at the due date time, you can anticipate the money you're paying so that when the due date is come, you have like, or the statement balance is closed, you have between 30 and 50%. So this is what is recommended, and we can check some sources, some trusted sources on. This is a good range for you to build your credit, but after a while, I think it's pretty much more based on your habits, right? So how you use credit. So for example, it gets to a point where using 30 to 50% won't change much your credit score. Like in the past, I told you guys already. So I got stuck. So 30, 50% wasn't something that was making a huge difference. However, working with my financial manager and building my credit history in a different way by using different products to achieve different objectives, this is ultimately what helped me.
Thanks. Amelia, Banu asked, apart from building credit, what are ways to invest in markets for newcomers, and does investing create a positive image in the minds of lenders?
Yeah, so again, when we look at the credit application, assets is something we look at. So again, investments is assets. So I think definitely that's something, that does look positive. And again, it's a total amount. And just inside looking at this one part of the application, it's total on the other side as well, what other debt that you have. In terms of like the investment choices for newcomers, I think this is where I encourage people to, please get in contact with one of our specialists. And then they can kind of give you, discuss a plan with you, that meets your goals and then meets your financial situation as well.
Awesome, thanks. There's a question here about building credit scores without a credit card. Are there other kinds of products? We talked about lines of credit, but are there other kinds of products that are accessible for newcomers that can help them build their credit score?
Yeah, I think credit cards is one of the fastest ways, and it is offered to like newcomers. Like like at TD, we do have the New to Canada package. It's a very direct way. If you're going around building credit with like let's say I had mentioned like paying your bills on time, that's a little bit slower. And again, it's not in depth enough, right? It doesn't really tell us more than okay, so you can pay your monthly bill. We're looking for like how longer periods of time of how you use money. Credit cards show us like in a 30-day period how you're looking at loans and lines of credit is a longer period of time. That's what we're talking about as you prepare to like borrow in like the larger sums of money, whether it's to buy a car, buying a home in the future. So think kind of like on long-term perspective.
Great, thanks. Guy, question here that came in prior to the webinar. Lilia asked, is it okay? And I think there's a few similar questions to this in chat. Is there any advice or is it okay for newcomers who haven't had a job yet to get credit cards?
Yeah, so that's a very good one. So my recommendation here is to check your bank of preference offer for newcomers to Canada. So they're very, very clear on their explanation on what is going to be available. And yeah, perhaps not having a job may kind of reduce the amount of credit you might get, right? But the offer is already in there. So if it's in there, and if it's not mentioning that you need a job to apply, it's probably because you don't, right? And the opposite is also true. So if it's not in there and you're looking for it, so it's probably that you won't be approved, right? So that's why I mentioned in my presentation that you should look for the offers for newcomers to Canada, because those are designed for newcomers to Canada, right? And they would encompass all, perhaps all, but most of the situations or most of the scenarios that newcomers to Canada face, right? And one of them, of course, is, for example, getting a PR or coming as a temporary work and a temporary student and not having a job, right? So I really recommend to check major banks, especially TD, of course, for the newcomers to Canada offers.
Yeah,
Great.
and just something to add to that as well is, to really think through if you haven't, if you're not working, one of the things for credit is, the ability to repay. And so that really highly, impacts your credit score. So if you want to build a good credit score, and I think, Guy said this as well, take your time. There's no need, there's no like, speed to market that we need to get this done in like 3 months or any, there's no timeline really. I think you just it's those goals that you set for yourself. So if you're still looking to find a job, I think maybe it's more important to focus on that as opposed to building credit, because you're kind of contradicting in yourself, because how would you be able to repay? So you don't want to put yourself in those situations as well too.
Awesome. Amelia Biamba asked, renting a car versus financing a car, which one helps you build your credit?
So again, I think renting would be like leasing, right? So again, that's all about just because both kind of talks about how you use with money. So I think whether you finance or lease, it's more important to keep up with the repayment schedule. Like that's a way for you to kind of finance your car to meet that borrowing need that you have.
Awesome. And I'm not sure you'll be able to answer this question directly, but maybe you can point Gaius in the right place to go to get the answer to this. But Gaius said, I just opened student accounts last year, and I was told that I'm not entitled to a credit card yet. Can you explain more on this, on how to get a credit card as a college student?
So I think for this one, it's hard for us to comment in that particular situation. I'd recommend you go back to the financial specialist that helped you and kind of get a little bit advice there. Each kind of credit application is a little bit unique. Some of these are general guidelines that we know, but if you're looking for like specific on like how you should be, what's my next steps, this is where the financial specialist and advisor can kind of guide you.
Yeah, and then likewise, I'm guessing it's going to be a similar answer to Adeg Bola, who said that they have a TD account with some money inside it that's dormant at the moment. How do I reactivate it ahead of my arrival to Canada? I assume it's going to be a similar answer for him as well.
Yeah, for sure. That one, if you get in touch with us, we'll kind of walk you through next steps.
Awesome. Thank you so much. Question here from Jeff, who asked the chances of getting a loan or a line of credit for newcomers with a part-time job versus a full-time job. Um, yeah, so I guess how does that affect a part-time versus full-time, your credit application?
Yeah, so we don't discriminate between like full-time or part-time job. Again, we look at total income. So does your total income, is that going to be able to be enough for whatever amount that you're looking for? So that's how we should assess it. But we don't discriminate between like part-time or full-time.
Right. Does how long you've been employed, does that factor into the credit application as well?
Yes, it does. So I mean, all of those are part of things we ask for. So we also want to look for a record of employment as well too. So again, it's when we think about credit applications, the more information you have, the better. But again, understanding like from a newcomer perspective, you may not have as much, and that's where this whole I think webinar is to really teach you to start thinking and like how to like get you there slowly. So usually more stability is important, right? Because we're looking for people that if we lend money to you, we want to ensure that you are able to repay for it back. So a little bit more of a stability in your role or job would be helpful. But again, it's every credit application is unique. We also have to understand what is the borrowing need behind it, what else is on that application, whether it's assets and so forth as well.
Great. And just a quick follow-up to that from Silver, just asked if we apply for a loan as a couple, do we get assessed individually or total income as a household?
That's an excellent question. So if you apply as a couple, we assess it based on both people. And so both people would be assessed for that particular amount. So in common times when you're combining your income, it does help as well. And then also it helps if like maybe like one person has credit history and the other person hasn't established that yet. That also helps because now you have a joint product. And then that helps the second person with no credit history maybe build some as well too.
Awesome. I like this question a lot, and maybe we can get both of your responses to it. What are ways, so Wadi asked before the webinar, what are ways I can build my financial literacy in Canada?
Okay. Do you want to go first and like take that one?
Yeah, so once again, I can share my experience, right? So we are living in a digital era, right? So there is a lot of content available on the internet. So it's pretty much the first thing I did, and that was even before coming to Canada, was trying to learn the more I could, right? So one recommendation though, in for this situation is try to get information from trusted sources, right? So there's a lot of information, like I said. We're gonna have like good information and bad information. So go for the banks, go for TD. We have a very good content. We have very good content on newcomers to Canada, new to Canada, as we call it here. There's a lot of information in there, not only for credit score, credit history, but other information that might help you. So definitely looking at the internet. I think also being in webinars such as this one definitely helps. So it helps you also to connect with people that have been there and have had the experience. You can ask questions, right? And you get like very straight answers. That's what at least I think we try to achieve in here, right, Amila? So trying to be very, very true to what we are talking about. So that's my 2 cents. Look for content available on the internet from trusted sources and get as much information as you can from people that have been through that. And those webinars in here help a lot on that regards.
Yeah, just to echo kind of what Guy had said, I definitely agree with like the trusted sources. So again, with like the digital information out there, it's really important to make sure you go with like, the sources that we trust, like a webinar like today is an excellent choice for to really build your financial literacy. I also encourage connecting with our specialists and speaking to like the professionals, because again, each situation is unique. So whatever information outside of what you can find and just reading off like or attending something like this, it doesn't give you kind of like that more personalized advice. So I think that's kind of what's really helpful in, making you feel confident and comfortable with banking.
Awesome. And I think that's a great point for us to end this webinar. Guy, Amelia, thank you so much for your time today. We, CanadaVisa, and on behalf of our audience, really appreciate you taking time out of your busy day to help us learn more about banking and finances in Canada. Chats, a lot of you asked, we will be sending out a recording of this webinar along with the slides. So that'll be in your inboxes tomorrow. Please feel free to take a look and share it with your friends. Thank you so much, everybody, for joining. And if Amelia and Guy, if you have anything to say, floor is yours. Otherwise, we can end this webinar.
Yeah. Thank you again, everybody, for joining. And hope you learned a little bit more about personal lending today.
Thanks, everyone. Wish all the best in the journey in Canada. And yeah, thanks, Riley, and thanks, Amelia, as well for the invite. It was a really good hour for me as well. Thanks.
Thanks.
Awesome. Thank you so much. All right, everyone. Have a great day. Bye.